What's up, guys? This is Bandit FX. Today I'm going to be covering my pre-market analysis for GBPJPY for March 20th, 2021. So if you take a look at the monthly chart, you'll see that um, GJ is actually coming into and actually passing the 100 EMA. So we do have 10 days left in the month, and I'll explain why this is significant later. But for now, let me just take these off. So if you break it down to the weekly, we did close our first bearish week for GJ. So this could be a huge momentum shift right now. So let me mark this as our new weekly resistance. I'm just gonna put it um, basically at the top of the wick only because it's such a high time frame. I want to be able to see like the actual peak. So this is the weekly resistance. Okay. Our last weekly support is obviously way down here, but let's just mark out a level that is somewhat significant. Like right here, see how we had this basically this rejection here before the continuation up. This is lining up with this level right here, so we're just going to mark this as our weekly support. Because it has been a previous resistance, it can act as support in the future. So let's mark this down. All right, so we have our weekly levels marked out. And if you come down to the daily, you'll see that we're actually breaking candle lows now. So what you want to see in an uptrend or a bullish trend is just a continuation of bullish candles and higher highs, higher lows, and higher closes consecutively. Because just like price action can trend and actual like candlesticks altogether can trend, individual candlesticks can trend also, meaning that they're all continuously making higher highs, higher lows, and closing higher. So what we have here is we had a push up on GJ on the 11th, and then we had three bearish candles that actually started closing bearish, and this candle actually broke the low of the last bullish candle, which is a very bearish sign. Even though it didn't close below, it did actually come down below that level. Then we had another attempt to push up. We did break the high, but that candle closed bearish, and now we have a big bearish candle from Friday, and we did close below this area up here. So we are starting to see a momentum shift possibly. See here, it did fake out, but this level was on that weekly support. So basically, we broke into this weekly level here, and then excuse me, this daily level, and then came down to weekly support, which was marked out. As you can see, like we had it on the weekly right here when this rejection happened. So this was basically a pullback for a continuation up. However, I could see this pair actually continuing back down to 148.320. So let's just look at the 4-hour and see what it looks like in a little bit more detail. Let me mark out these zones right here. So you'll see we're basically sitting on a 4-hour support level. Reason this is significant is because if this does break, this is a confirmation for sell's long-term bias. So let's see, we do have somewhat of a double top here. This is actually a lower low than this, so we're starting to transition, like I said. So we can get a basically some sort of little like revival bounce right here to see if it can continue pushing higher. This could possibly be a range that we're just in, or because this actually didn't close lower, or we are continuing down, which is most likely to happen. See, we did get a little bit of bounce on the 1 hour. So what I'm looking for right now, let me just mark this out. I'm not really looking for buys anymore come Monday because what it seems like is sells is going to be the overall bias here. So let me just make these areas a little bit cleaner, mark them out. So for sells, I'm looking for sells below this candle close. Let me just adjust this. So 150, 800, I would say. So if we get, or 820, that's fine. Just okay. So sells below 158.20. What we're going to see here is if we do break this level and close below, we're going to get the wick fill on the 1 hour, and then we're going to continue down to the next level. So let's see. Our next level of support is right here on the 1 hour time frame. Obviously, if you're swinging this, you're going to catch a much larger move if it does come down, but if somebody who, you're talking about somebody who's trading intraday or scalping, basically what you're going to want is a close below this level and then the wick fill and possible continuation if we do have volume down to this level at 150, 400. So this is like a 40 pip range right here. This is a pretty decent sized range. This is a pretty good trade. Um, Come Monday, provided we don't gap up, gap down. Obviously, price might range or move from here come Sunday on market open, but we'll see what happens. So let's move it down to the 30-minute time frame, see if we can get a little bit more detail here. Okay, so no, this is basically just a rejection. This was a fake out of a break, and then we did make a lower high again, and we're continuing down. So this is most likely what's going to happen come market open, is we're going to have a push downwards. Now, if we do come up, let's go back to the 1 hour because the price action is cleaner. If we do happen to come up, I can see buys above this level. So I always like to prepare a bias or a trade at least for both scenarios, providing what the market gives me. But um, I'm more comfortable with sells at this point. So let me just write this down: 151, 140. Okay, so this is what I'm looking for as far as buys go. This is obviously our first level of resistance on the 1 hour time frame, which is 151,647. And then for sells, like we were talking about before, 150,400, call it, would be our first target after the wick fill for sells. So, all right, guys, let me know what you think. Leave a like, leave a comment. If I haven't covered a pair that you do trade and you want me to cover it on my next video, just leave it in the comments and I will make a video of it. So, thanks, guys, and don't forget to subscribe.